Um, I'm interested on the last speaker and probably the second speaker. My question is straightforward. Not coming from a financial literacy level, but I'm coming from an engineering point of view. I like asking why and how. So one of the speaker indicated that we are under saving. So it's a puzzling question to me and say like, okay, how much then is prescribed from in a mid context? How much do we need to save, perhaps percentage-wise, in the relation to our salary benchmarking? That's question one. Question two, as I indicated earlier, I worked in the mining industry for 10 years, and one thing that happens there, perhaps uh, retrenchments. You could see in the newspaper a lot of retrenchment in mining. And what's so frustrating probably at that point is like you get retrenched and your pension takes long to be paid out, right? So are there any regulation probably that indicate how long will the pension fund payout happens? Maybe this also discourages the people to save because I ask myself a question like, why will I save if my own money when I ask back and it takes this long? And probably lack of that literacy in terms of like the time frame or schedule, it's key. So perhaps I could just give that to the panel to unpack that for me. Thank you.
Good evening, everybody. My name is Abraham, and I'm from University of Namibia as well. So there are so many issues that it's not. I don't know whether it's going to be a question to the panel or whether it's going to be.
I think you can divide it. Do a quick comment and then you close it with a question.
Or a comment. I'm not really against the issue of developing the sustainable pension funds or savings, the proper saving schemes. But I'm more concerned when the policy comes up to say, I want to get, let me say I decide to retire now from my current job. After 5 years I have worked and I retire, I go for another job and I expect to get my retirement fund as it's a culture in the meantime. Now you are with the current policy that you are trying to introduce is I should take 25% and then 75% should be kept with the pension fund. Then for me it's a bit hectic because let me say, for example, I just retire. You know, sometimes you just get tired. You are just tired, you don't work any longer, and want to go home. Now I retire, I go home, then I have to wait for other 20 years, depending on the age of I retire. Then for the next 20 years, I'm waiting for that long period of time to get my pension. And I also understand that even when I get to that age of 60, my pension now, I'm not going to get it that the whole of it like the lump sum. I'm still going to get it in portions. After the years I have suffered and suffered. No, really, it's not like it's not a joke, but we need to come up with good schemes that will help us to have a healthier pension funds. Like she was suggesting with Sarah. Is it Namanje?
Mrs.
Namanje. Then she suggested some savings scheme, like maybe apart from now the pension fund that is being withdrawn or deducted from your salaries. Then let be there also another additional savings scheme that in case I want, or if I retire in 5 years, I can claim from that scheme. Or in case I decide to, maybe after 5 years, I can have access to that scheme if I want to.
I just want to summarize what you're saying. So the comment is that, look, based on what we know, based on the culture, it's inadequate right now, just for you to think about or to fathom the fact that you're not going to get a hold of that 75% lump sum immediately. And the question is, what other additional schemes could be put in place to assist so that but there's something else or some other savings that can assist me in the meantime? Am I correct?
Yes, that's right.
Thank you very much.
My name is David Genjere. I work for the Social Security Commission, but when I come here in the evening, I'm really on my own. All right, but I think I like the presentations, but I'm missing something. I was hoping to hear, because something that we are dealing with is retirement age. Early retirement, normal retirement, and late retirement, and how it impacts. So this is addressed to all the partners so that they can deal with it. But then, my friend, from on the informal sector, I think I like the analysis in terms of their shortcomings, and I also appreciate the proposal for special schemes. But these special schemes, I think they need some thorough consideration, and also in terms of the law. I think I'll come later in terms of just the issues with the Kenan part of the informal sector. Thank you.
Thank you very much for that.
Namibia. I've been thinking, the question is directed at our lecturer from economics. What is the value of money over time? For instance, I'm contributing $700 private scheme right now. And when I retire, which is in almost 25 years or 15 years, if I retire, what would be my value of money? I'm saying this because I started working in 1995, and I was contributing close to $700 then per month for about 7 years. When I left that job and joined NBC, that scheme stopped. And when my money was calculated, I was given next to nothing. Is it because of dollarization in Zimbabwe, which we know that the inflation rate is very high? Is Namibia in danger of taking that route because of the rate of inflation? Currently, would the money we are contributing now buy what we need in the future? Because it will be a lump sum. A lot of people here will retire probably in 20, 30 years. If early, maybe 10 years. Will they be able to buy their basics? Thank you.
Mrs. Ango, to please just start off with that first question. I was looking at the two questions from the gentleman. Yeah.
Oh, I think I forgot those. I got so excited with the last question.
Okay, then let's start with the last one.
Start from the bottom. So we look at adequacy, sustainability, and integrity. And that integrity speaks to governance as well. And that governance has a policy framework and a regulatory framework to it, and the regulator is here. But every pension scheme has the policy directive of ensuring that the asset allocation of that scheme has got the long-term benefit payment in mind. So every single scheme out there, the regulation 2913 that's been referred to, is actually where the regulator sets out the minimum requirements as to how that money must be invested. And each pension scheme has an investment policy. And the asset allocation starts looking at the liability, and it asks itself, okay, if these are our members, years into the future, and knowing that they must meet their benefit and annuity into the future by beating inflation, how must we invest that money? So definitely the time value of money is very critical, and an investment policy is very critical. And each pension fund has to start an investment objective of beating inflation. So there's various elements to asset allocation and investment considerations and downside protection, making sure that it's a diversified portfolio. So the regulator starts with that, and they ensure that each pension scheme, the trustees, ensure that they have a policy that they can meet the asset allocation. Perhaps what happened in Zimbabwe, God forbid that happening here or elsewhere, but that hyperinflation is almost becomes, you can't plan for that because it's irregular. You can't plan. You can never say, in the event we have hyperinflation, let's make sure because then you'll just assume too much risk in investing, and then you can lose the money. So that's unfortunately one of those force majeure type of events. But generically speaking, the integrity speaks to that good governance frameworks, even from an investment strategy point of view, that every pension has in place.
Currently, just following up on that, reflecting on the conditions in the country. I know obviously in Namibia we are very, very traditional and risk averse as far as investment is concerned. If you apply within our framework at this point in time, is there some, I don't want to say a guarantee, but are we okay? Looking at the prevailing economic conditions within the global.
Yes. Well, globally, one of the things I said that ensures the best was preservation. I said administration costs, but I also said investment returns. So investment returns are part and parcel of it and not critical. And globally, we find ourselves in a low return environment, and especially now in the scenario where we've got global inflation. And that's why it's so important that you have a sound investment strategy. Are we okay in Namibia? Yes. The reason I'll say we're okay in Namibia is there's an element of sustainability that speaks to making sure that the pension scheme is solvent. Now, globally in developed markets, they fall below the mark. And in Namibia, on average, at December, as an industry, we were at 102%, and GIPF even stronger at 111%. So from a fear of saying, are we solvent enough? Do we have enough reserves to meet our future liabilities as they become due? Actually, when it comes to SADC, we do very well on the integrity side. Our problems are with adequacy and sustainability. And maybe the regulators.
No reservations from my side. I just want to reiterate what Sarah said, and maybe just to link it to the question on how much is enough to save.
Yes.
And that is a very difficult question, and that's what I also have at the back of my own mind. Because if you are part of the GIPF, nice, because you get a defined benefit, and you know what you will get. Now, and if probably if it does not, it will be the taxpayer who will rescue you. But if you are in a private sector type of arrangement, which is defined contribution, then the returns, what you put in and the type of return over which you don't have a lot of control, is very important. And then, of course, the big question is we do not know how long we will live after retirement. So you have the sort of elusive goal. I don't want to run out of money before I die, but I don't know when I'm going to die. So that's one major thing. And I can't remember which of the speakers also talked about just the nature of what is the type of financial market returns during the majority of the time that you contribute to a defined contribution scheme. That also have a very large impact. So I think that remains an elusive answer. How much is enough? Although financial advisors will give you guidelines on what percentage of your income to save over how many years, but that is still a difficult question for the individual. Thank you.
So just wanted to add to the discussion on are we okay? What we do to try to be okay, that is the word, we do diversification. So we ensure that our funds are diversified within the different markets, within the different geographical areas. We also diversify with the different type of managers that we use, the fund managers. So they have different styles, different philosophies. So as we diversify with that, make sure that we don't lose when something goes from the other side, because the other side here we are doing well. So the diversification really comes in and helps for us to be fine, if that is the word. But I wanted to touch on what the one question that was asked, that how long should pension payout take? So normally we want to pay as fast as possible. We try to keep the funds in our funds at least the longest 12 months in the fund. But in most cases, we have noticed that the delay comes from the employees themselves who leave. In most cases, the tax is not up to date of the employees with NAMRA and so on. So the administrators are struggling to get a tax certificate for the employee who left. And now the money is there, and then cannot be paid out because your tax is not up to date at NAMRA. So that's one of the main reasons why pension payouts take long from the defined contribution side.
That was being discussed. If that period was to the lady who lost money in the pension fund in another jurisdiction, let's emphasize that. If that was during the period of hyperinflation, that could have been an example, as Sama explained. If you look at Namibia, we actually publish these figures on a quarterly basis and an annual basis. And if you follow how pension funds have performed, even through the crisis, because the crisis that hit us the hardest and that lasted the longest was the 2008. That had the greatest impact on us. 2010, it hit us, the impact was felt 2010 to about 2011. COVID recovered almost instantaneously, it was the same financial year. And therefore, you could really see from the figures that we're doing very well. We're beating inflation on the returns on the pension fund investments. So the diversification helps because you will need a global-wide disaster or catastrophe to actually have a heavy impact on the funds. But there is one scenario in the current Namibian pension environment that could lead to you actually getting out less than what you put in, and or less than what you expected to get out. And that is a system called vesting schemes, which FEMA also tries to correct. This is where the employer says, if you work for me for 5 years, when you leave, you can take what you personally contributed. You will not get what the employer contributed, or they'll have a scale to say, if you leave after 10 years, maybe you can take 25% of also what the employer contributed. So if that scenario were to happen in Namibia today, it would probably be because of vesting schemes and not market performance. Now, the first question, under saving, how much is benchmarked? We don't have a prescribed minimum saving rate, but what one should be looking at, especially if you're in a defined contribution fund, is to look at what is your target. Because we have a number of magicians called mathematicians who can run progression series and all these and kind of estimate based on historical market performance, which will not cater for exceptional circumstances, but give you really a good estimate of in terms of what your target is and what you need to do to hit your target. But then, of course, you must make estimates as to how long you're going to live. Maybe the life expectancy can be a guide, but yeah, that's basically what it is.
So it went up. Okay, for me it's probably still 58.
Maybe that's another thing when we look at estimates. It's 64 at best. If you live to 60, it's actually higher than 64. So just be mindful of that. And then we have, why does it take so long to pay out? The gentleman specifically sketched the scenario of a retrenchment. Now, in a normal course of operation of a pension fund, where only one member leaves or two members, or it's not that many that leave, it's usually faster. The catch with diversification, which protects us in terms of return, is that when you have a retrenchment, and let's say a mine is letting go of 50% of its employees, it means 50% of the assets of the fund need to be liquidated. And some asset classes are not that easy to liquidate. So usually in retrenchment, it takes longer because the liquid assets at hand do not meet the abnormal claims that are now coming in. But then we don't have usually funds would set guidelines for normal day-to-day withdrawals, but for events like this where it's massive and they have to sometimes try and liquidate assets that are more difficult to liquidate, it may take longer just for that reason. Current policy trying to be introduced. The gentleman is speaking on preservation. As we know, there was a proposal on the table. Inputs were received. The process is continuing to consider those inputs. Honorable Minister of Finance has appointed a panel, a committee to specifically look into those. So let's wait until the engagement starts with the committee.
thing that I want to leave the audience with that is challenging in the informal sector is the issue of the portability of social benefits for migrant workers. It's also a challenge that is staring at us that we need to address should we develop any special schemes to attend to. Very, very important. Yeah.
Thank you for that contribution. Dr. De Beer, do you have any input with regard, especially on
It has been raised tonight more than once. Will I get my money back? And preservation is really important. But then the pension fund members must be sure that they will get their money back. And unfortunately, the less stable the employment and the economic situation in the country is, the more important the short-term considerations become. And I think that's maybe our real challenge in a country like Namibia. How do you tell people you need to preserve your funds for retirement if they have really immediate, very urgent financial needs?
Retirement age. There's no mandatory retirement age. So you can retire after 5 years. You can retire when you want to retire. You call it retirement. And really for purposes of pension provisioning, the only thing is the longer you work, the longer you have to save, the less you have to save. If you're saving monthly, the less you have to save every month, so that you have enough to sustain you throughout retirement. So if you are in the lucky 1%, you could probably work for 5 years and save enough to sustain you for the rest of your life. But there is no mandatory retirement age.
But the guidance is obviously, the
public
other
service? Yeah.
lady on the floor spoke about the time value of money. And so you want to make sure that you are longer in the scheme. So you don't want to retire too early. And I think there was a year where we were considering as a nation introducing early retirement for civil servants because we had this exorbitant wage bill. But upon true reflection, you recognize and ask, well, if we have, it would not be a full exodus, but a mini exodus of people who want to retire at the age of 55, a big benefit kicks in to make sure that the retirement provisioning is there and that they can access it. So not everything is so straightforward, but for personal financial advice, you have to ask yourself, do I want to be prudent in my life? Because we all know when we become old, you will have less chances. You have more chances today. If you think today you can't manage, you're definitely not going to manage when you're 60. But there's a lady called Anne who asks, we need to recognize that the pension system we have is a British pension system, and it looks at a European 4-member family in mind, and that the African context is perhaps very different, where the African family has a different situation. But we also have to recognize the African family is increasingly changing as well. Maybe that was very valid 20 years ago, but we can see it's changing because we have a lot of our old people who are not going to the village when they retire. We have a lot of our old people who actually did well. Their kids all went to university, and now they live by themselves. So we have to understand the demographics that we face with when we try and say, well, our context is different. But what's very true and real is, in more developed countries, people have various means of social cushioning which we don't have, and that is why it's perhaps more pressing for us to access our pension monies, but we must first use all avenues. Social Security has not come to the table with an unemployment insurance benefit. So let's first do everything that can be done rather than saying the retirement. Otherwise, we become a nation of grasshoppers.
I just want to make a few points. First of all, I was going to mention the unemployment insurance. I think eventually it will come into existence, and that may be a factor in this short-term issue. But I think we have to recognize that a very large percentage of people in Namibia cannot afford to save. They're living from hand to mouth, okay? So from a government point of view, we look at it from the point of view of the people who are not, most of us in this room, who are trying to plan for our lifestyle and a decent retirement, right? Now, one big issue that I think we have to think about is that all the funds that we're talking about here are for profit, all right? And there is, at least one can consider the concept of a not-for-profit fund. Presumably, a not-for-profit fund would have lower administration costs, all right? Now, if you read the Social Security Act, you'll see that the kind of fund that is projected is what we commonly call a solidarity fund. It provides for cross-subsidization. All right. I don't want to take up a lot of time here. I just want to say that notwithstanding Ricardo's contemplated, Social Security Commission started decades ago trying to develop the National Pension Fund. And there was such resistance from the financial services industry, who brought in the IMF and the World Bank to support their position, that was one problem. The other problem was inadequate statistics to really do decent actuarial projections. But that project was put on hold, all right? The Social Security Commission has done a lot of research and developed proposed designs for both the fund and for governance. And I can't say when, and I'm not going to talk about what it is, but I think it'll be there will be public discussion of it. And I'm sure we'll be back here, and some of you will be back here to comment on it. But the basic principle, which at least our ministry has insisted upon, is the principle of the Solidarity Fund. All right. So to create a pooled fund for low-paid employees who are subsidizing each other is not going to do the job. And I just wanted to mention one thing. The Namibian Constitution, Principles of State Policy, Article 95, Section 6, includes as a policy that the state is supposed to promote for the welfare of the people, insurance that senior citizens are entitled to and receive a regular pension adequate for the maintenance of a decent standard of living and the enjoyment of social and cultural opportunities. Now, from what I say also, that at all stages in the recent rounds of design, the issue of the informal economy has been present. I'm not sure a solution has been found that will be acceptable. It's a serious problem. But there are pension funds in the world now. Maybe I should say one last thing. There was a trend during this period of what they call neoliberalism to switch to defined contribution funds. From what we have been informed, the trend has public pension funds have reversed. The trend is towards defined benefit funds. And I think I'm going to leave my comments, but thank you very much.
Good evening, my name is Simon Abdullah. I'm a former YLD alumni graduate. I'm the founder of Abdullah Charity Foundation. So I really thank FES for the knowledge they introduced us during our YLD program. I will be here tonight, and I give so much respect to them. So my contribution is going to be simple. You know, my grandmother always used to tell me that we can send the monkey to go hunt bananas, but if we don't tell it on how to plant bananas, it will still come home hungry, and other monkeys will not be convinced to hunt the bananas, and the hunger will not be catered for in the society. What am I trying to say? The problem is financial literacy, if I ask my question. Because for someone to really understand what pension saving schemes or whatever it is, we need to have financial literacy. So that is very important coming from all the panelists, that how do we take the information out there? How do we convince the people? Because some people just know how to have money in their pocket, and they are not convinced as how they are going to live tomorrow and all that. So my other question goes to Ms. What is the name? Is it Ms. Sarah? There have been so much like mismanagement of government funds in terms of NAMFISA. And I believe that also, I'm not, so not I'm yes. So my question would just be like, how does that also affect the people to have that that saving mentality?
Public confidence.
Yeah, public confidence trust. Yes. If we have so millions have been stolen, how can we have that public confidence of saving? And the other problem also, when you talk about the informal sector, this we are talking about people that are paying people less than probably companies that are touching taxes. And I believe when we talk about saving, are we referring to the money people are being paid, or can I also contribute with a salary of maybe 2,000 and all that? So the question is, how do we incorporate these companies to also join the formal sectors, or to at least pay people a salary that is equitable for them to contribute to fund? Because if they are not really playing in the Champions League, then we should relegate them, or just have regulation that you are not paying people enough for them to survive for their future. Thank you.
Thank you very much.
My name is Eleni Nguva. It's evening. I would rather maybe keep to my traditional athletic title. I think Meliki has done part of but all the presenters has presented a low percentage of those that are in the saving net. Are we saying we should raise those percentage in order for us to be sustainable? And maybe that will speak to the organizers, FES and UNAM, who need this financial literacy. Is it the 1% lucky one that are here, or is it those that are in the coca shop that would maybe increase the percentage that we are presenting as low? Thank you.
Questions here, I understand. There is a lack of understanding of the mathematics. That's one aspect of it. There is another big issue, like I have it here. I just want to quickly say this. Singapore introduced Central Provident Fund, like that's basically coming from the same colonial times from Britain, basically introduced compulsory savings schemes, then they converted into a Central Provident Fund. By 1985, that contribution towards that fund was about 50% of the salary that the individual employee is earning. Like if you're high earning like a 10,000, then you put 25%, your employer put 25%, went up to that. And then it actually cost them trouble and they reduced the rates. But people went for saving that money, trusted, and then they did not oppose. They saved with that fund. Why did they do that? The first thing is the credibility in the governance, in the system. That is a problem. That is what is lacking here. If something comes from there, we are already like everybody is thinking, no, something is wrong. Who's going to eat? That's a question. I will tell you one contradiction. I was generally, I read newspaper every day. On a Monday's newspaper, I'm reading this title lines. It says, the health fund has to be created, and then contribution from everyone who earns about 5,000, you contribute $50. That's a suggestion came from whatever. And the second day, on the newspaper, on the first page, $240 million fake tender was issued in the health sector. Like after reading this one, if you tell me contribute $50, I won't contribute even 5 cents. I will come. See, now the issue is now, we are actually, there is a kind of models that has been set. There is no credibility. Nobody is trusting anyone. You may have a very good intention, you will be really looking after people, but that could be your intention, but the confidence is lost. People are doubt. One populist politician picked up the 75 and 25% issue, right? And then everybody came to know, they saw, like, they all like cried, and then now you are sitting and discussing. How would you not tackle that question? That means, did you think through it? This is my question. Your desperation. You should think through, study, analyze, expect all these questions. When that was raised, you should be able to answer convincingly. Then I should be convinced. I should trust you. But when that was opposed, immediately he backtracked and he want to go and study and think. That did he not think through it? So that we lack confidence in you. That is the biggest problem here. So this is what we need to address here. The first thing is now, you address credibility in the system. Bring the credibility in the system. For that, every individual, from bottom to top, everybody should have an integrity to work proper, to deliver. That is the most important thing. That has to be first taught. Before the financial literacy, teach people how to have principles and have some integrity. That's all. Thank you.
Remember, when you go to work, it's for many reasons. You don't go to work for the same reasons. Sometimes I go to work because I just want to work for 5 years, resign, and get my funds because I'm already planning for 5 years. I want to see this fund. Now, what really made my concern is here, that issue of
You don't want 75%.
or retrenchment. Yes, I am retrenched today, or I'm retiring today, or I'm being returned to some illness, whatever, but I have to wait for 20 years, or 30 years, 15 years, 10 years to access my pension. And this is not going to work at all. This is torture to the community. So, let's just be unique, or let's be some other ways of saving, like additional saving schemes that will help us. To claim or to,
I think we didn't have, perhaps that was also part of the challenge because we didn't really have a comprehensive response to that earlier question around that. What are perhaps the alternatives? Can I have my thank you, sir. Thank you, sir.
Not much. My name is Franz. I think for me, perhaps I'm taking from what he said. I'm also taking from what he said. The question that I'm seeking, perhaps from the panel, and it's good, Dr. Nakuta, I salute you. I see now you are part of the committee.
Oh, yeah.
Yeah. So, I read something like that. Okay, the question is really, I'm trying to understand, being engaged in this question of FEMA and also the issue around, and the concern around saving in the country. This saving that people are contributing, the ownership of this saving, is it with whom? Who is the owner? The ownership of this saving, it belongs to whom? I'm trying to understand, because the aspect of regulation, it infringe my right as a contributor. Do I have the right to this saving? Is it mine, or is it to who this saving belongs? If you can answer that question for me. I think perhaps for me, this is where I'm formulating my thinking on the question, but I need that clarity first. Thank you.
So let's start with the last one. Whose money is it? Unfortunately, a pension fund does not work like a bank account. The bank account, the money remains yours. You can go and withdraw it any day you want to.
Can we please have one meeting? There will be a networking session afterwards for those that want to chat. So let's just provide the platform for those that we invited to address this. Please go ahead.
So you can withdraw it at the ATM, go cash at the till. It's your money. A pension fund actually is an arrangement where two parties come together, which is, or maybe three, which is the pension fund and either the employer or the member, or the employer and the member on the one hand. The employer and the member says, I will give you this money, $200 for 40 years. And the agreement is, when I reach either retirement age, or if something unfortunate happens and I don't reach retirement age, this is what you give me back. So until the time that what you agreed on happens, when you are entitled to something from the fund, that money is not the member's money. It's the money of the fund. The fund has a liability to honor a promise when what you agreed on as the trigger event for payment happens. Then they pay you. But in between there or there, in between here and when that trigger event happens, as you have agreed at the beginning, you have no claim to that money. The fund can do what it wants with that. Agreed today you're going to give me this. The fund should be able to give it to you.
Provided you're alive.
And that's why it's so important that all members have a right to elect their representatives on the pension fund board. So it's important to participate and engage in the member education forums that your pension scheme provides for. And unfortunately, the habit and practice is, that's for one day when I'm old, and so we don't care. We need to start caring today. Or did anyone else want to answer on that issue? I'm going to move to the other questions. The issue of integrity and confidence, like everything else, confidence and member sentiment is very important. And I think what may help with this is just a matter of statistics. So it's obviously very unfortunate that a few instances have created this perception that in some pension funds, notably as was indicated on the floor in the instance of GIPF, that confidence has just reduced. So if we look at the statistics, the good thing is if you want to look at the statistics and you want to assess how well funded is the pension scheme, because I think what everybody's concern is, will GIPF be able to ensure that when people need to access, as we've been told, that the pension fund has a life of its own and each member is only entitled when the trigger event occurs to what they've accumulated in the fund. So in the event of GIPF, I guess the concern is when I retire, when I need to access my benefit, will there still be money left in the fund for that? Now, statistically speaking, GIPF is an extremely well-funded pension scheme globally. What we mean by that is the solvency ratio. So the question is, if we look at the assets of the total size of GIPF versus the liabilities, and the liabilities are projected well into the future. GIPF's actuarial valuation actually says, let's estimate for every single one of our members, 85 years into the future, beating inflation, how much money must be available so we can pay them? And there's an excess, there are sufficient reserves, even after accounting for contingency reserves, whether it's HIV/AIDS, and if in the event many people die at once, not having very good clean data that we say let's make a reserve in case the information is not fully correct. GIPF is very well funded in that regard. So the concern of what may have happened, which is still a bad thing, you never want that, there's a scandal. But what you should ask yourself is, how well funded is the pension fund? And in the case of GIPF, it's 112% solvent. So there is excess reserves, and we can comfortably say that we can meet the benefits in future. Yes, we must make sure that the regulation that NAMFISA has provided for is adhered to, and that the own governance structure of GIPF, that we make sure that, going forward, that we maintain so. Now, if you want to speak about DCP or recent things you've read, never in the history of GIPF has there been a loss at a program level, because we are so well diversified. And even the former developmental capital portfolio that started in 1998 and was unwound in 2002, it made a profit. However, yes, there were some investments where people or the investments did not make good sense, because it was the first attempt at private markets where there were losses at company level. But if we take all the companies into account, if $10 was put in and I gave $2 to each of us, maybe he lost his $2 and maybe she lost 50 cents of her $2. But from the total $10 that was given, she, with her $2, made $10. With my $2, I made $8. With his $2, he made $6. So the $10 that was initially given actually made a profit because now we have 32, but with his $2, he still lost $2. With her $2, she still lost 50 cents. But as a whole, there was a profit at a program level. And so what people must understand is the fund is well funded in terms of its solvency. And there are governance frameworks in place that are adhered to. It's unfortunate that at times when we have scandals that have occurred, that it gives this perception that money is running out, which is not the case, fortunately.
As we close, I really want to just re-emphasize this. And I want to leave it with the panel because, you know, when professionals speak, you were explaining it was from a statistics perspective, but perception is not driven by stats. That's the challenge. Perceptions are driven by headlines, they're driven by, even if 2 people have lost from that 50 cents, that will be the narrative that will be carried. So perhaps I think as we are closing, as we're having this conversation, how do we change the perception? Do we put a little bit more into driving, you know, public outreach, the PR, not necessarily just having logos at the trade fair, but how do we make sure that we change that perception? Because JRPF is performing exceptionally well to a finance person. I think the perception aspect, and that's also deals with the issue around what my senior from the UNAM was talking about, in as far as that confidence and credibility is concerned. Please address that in the responses.
So, no, yeah. So before we give the mic to you, so literacy is really a problem, as you say. We really need to get to the facts. We shouldn't just go with what everyone is saying with the flow of headlines and so on. When we have member communication sessions, the employees don't attend at all. You send emails, you go to their offices, they just don't attend. When they read something in the newspapers, then they want to complain. And then we say, we invited you to the meeting, you didn't come. So we really need to ensure that we educate ourselves of what is happening. I don't know why I'm talking about JRPF. I see lots of people here work at UNAM. And then I said, pension fund is not about JRPF. I don't know why I'm talking about JRPF. I mean, the industry, credibility of the industry is doing really well. The reporting standards that are there, we report to NAMPISA on a quarterly basis. The trustees are meeting on a quarterly basis. The Unipoli pension funds or the university's post-pension fund is doing exceptionally well. The NBC is doing well. Really, the money, our money is there, it's invested. We do diversification, and the money will be there at the day of retirement. And we really need to work on the skills level, on upskilling the trustees themselves and the members of the fund and the public, just to ensure that there is a certain level of literacy.
Okay.
Yeah, just a few comments on comments made. You see, I fully agree that the problem that we have here is the problem of social capital that lacks in the public space when it comes to the administration of pension, especially when it comes to the GID that everybody wants to talk about. You see, the problem is everyone who has access to social media can go and say anything that they want about GIPF and any pension fund in this country, whether you have a wealth of evidence or probably not, and 70% of the users on Facebook will give you a like button. And when the fund responds, it will struggle to convince the people because you will be labeled that the fund is just defending itself. There's something you are hiding. So probably we have a low social capital index, and therefore responding to the question that Ricardo asked as to what must be done, we need to improve on a drive to get these facts that we are stating here across to our customers, to our would-be users. You know, the uptake of pension is linked to the level of education of individuals. The higher people are educated, the more they are easy to take up pensions. The lower the level of education, the less Now, coming from the civil society and representing or talking about the informal sector, we all agree, no offense meant, that when you move into the informal sector, mostly in terms of education, you have lower levels. Not all of them, there are a lot of skills there. So obviously, you have to do a better job in convincing people about pensions in the informal sector. I will attempt to answer the question, close the gap in the informal sector or not. If not, amend the regulations or come up with special regulations and then assist, coax the people in doing something and take a step back, because whether we like it or not, the perception of government and any government entity when it comes to creating any scheme, people see, as it was said, that you want to start eating. It doesn't matter what you say. But when you coax them into taking over, it might work. Moving towards conclusion, the pressure that came from the private sector that hindered the establishment of the National Pension Fund more than 30 years after independence, and then the Bretton Woods institution got involved. It's actually a pity that we as a country, we have to yield to the Bretton Woods institutions and neglect 70% of our workers, resultantly protecting the interests of capital. That is a pity. And it doesn't serve the interests of the promotion of social justice. So for us as trade unions, it's really a sad day. Let me end there.
Good evening. My name is Goran Viman, chairperson of the Namibia Building Workers Pension Fund. Ricardo, mine is a comment. What you just said, the perception drives the whole. It is true. I've been doing a roadshow, the very first roadshow since the fund was incepted 33 years ago. And we did it last year, and we were surprised that people thought that the fund belongs to the administrator. We recently moved administrators, changed administrators, and I was very surprised that employers didn't know that they belong to the fund, they belong to the administrator. So education, yes, is the key. Since our first roadshow last year, we have tremendous inflow of members because they started understanding what the fund is all about, what they are benefiting. And we went out there, down on the ground, in layman's term to them, because, I mean, if you go and talk the high English with them, they don't understand. So you need to go down to their grassroots levels and explain to them in layman's terms. So yes, education and financial literacy is a problem.
Thank you for coming here tonight on a few occasions, so I want to take the microphone to say something, but I think it's maybe necessary, or maybe it adds a value to today's discussion. I think one thing, if we look at the Namibia pension system, is to understand the path where we come from. We are right now 32 years after liberation, and we have very different kinds of incomes, also welfare stratas. So basically, there's a high social inequality if you look at the Gini coefficient, and there's a typology of by Anderson, which might be known to some of you, who's a sociologist, and he differentiates between the social democrat welfare state, between the conservative welfare state, and the liberal welfare state. And the reason I'm saying this is just to make us understand, maybe to help a little bit us to understand that it seems to me that Namibia is not one of the three, but is partly like each of the three, depends on which strata you belong to. It's a conservative welfare state when it comes to most of the people who work in the informal sector, and family support when it comes to a need. It's a liberal welfare state when it comes to private income, like the more richer, like the wealthy part of the population, and it's a social democrat welfare state if we look at the employed, the formerly employed. So that's a diversity, I think, which is very complex, and it's not very easy for me. Thanks.
My concern over pension funds in that line is like, we are now young people here, we're moving through an age of digitalization. Now, one thing that puzzles me is like, okay, if you have your FNB bank account or any other bank, you can see your account. Why don't pensions innovate and go to that route and say, like, you can see your money as it grows? That can probably impose confidence. I'm serious. Like, I'm serious. Like, you can impose growth in terms of like integrity and confidence. Like, oh, yeah, okay, I'm saving. Out of the year, I can see my balance, the way it's growing.
So
Or maybe.
can I ask you just an honest question? When you see the balance in your FNB account, do you have an urge to spend it or to let it grow?
No, I want to spend it, but I know for sure, like, look, if let's say you have a 30 days account, I know the rules. I have to play by the rules. But that give me confidence and work like, man, I have money. I have money. And with that, it can trigger somebody to save. I'm serious. Like now, you want to save every day about pension, but at the end of the year, you don't know how much are you saving. The balance only comes when the employer asks. Or maybe when you want to resign, when you say like, you can only take out 50. That's one contribution. The second last one, I don't know, I'm not coming from an economic perspective. I believe this taxation, it looks like a double system for me. Because the same salary that's been taxable, then you save the pension, then when you want to request the money, they tax you double again. Can somebody answer that for me maybe later when we network?
Just in conclusion, I know that when we're talking about social protection, there's quite a lot of, I think we've stepped a little bit out of the pension conversation and touched on social protection as well. And I think that's one of the reasons why FESP really exists. Mr. Gapara, I just really just want to also point out there is a need for us to have this on a regular basis, clearly, from the issues that are coming up. Particularly the issue around the informal economy. I just want to really put a challenge on the table to University of Namibia. Dr. Shikufa, is she? Okay. The other half of Dr. Shikufa is here, so he will relay the message. To really see if we can have a session that just focuses on the informal economy. Just on the informal economy. I think we didn't really cover that much ground, but as you can understand, the time is limited, looking at the passion around the subject matter. Perhaps just from our speakers, each one of you just to have 2 minutes to just close off your final contributions, and perhaps in that also include the issue around sustainability. I know we spoke a lot about the issue of adequacy as well as the integrity question, but the sustainability question, if we can just reflect on that as we are closing on. Are we in a good place? How do we make sure that we ensure that some of the new people that are coming into the employment spaces, the youngsters that are upcoming, have a different view around retirement funds, pension, and generally just how to sustain it going forward, and perhaps the benefits that come with it as part of your conclusion. I'll start with the workers.
Part of the workers I'm representing tonight currently not enjoying any of the benefits under discussion. They still have to enjoy the informal workers. So I seriously hope that the FES, the university, as you said, will organize another session specifically targeting the informal economy, because we have so much to share and interrogate. The National Pension Fund will continue to exclude the informal economy. So in its current format, as contemplated, it will not be an answer to the informal economy. Thank you.
Thank you. I just want to emphasize that the issues we are facing are really very, very challenging given the structure of our economy, unemployment, the large size of the informal sector and so on. But I think we must just also realize that the informal sector and people who are not belonging to a retirement fund are not the only ones at risk. We must also realize that many of the members who are part of a formal pension fund will not be able to retire with the income they are hoping for, and will not be able to retire in comfort. Thank you.
So I want to answer the last question. The speaker, the person asked about the statements, because they get the statements when they request for it. So the fund that I am involved with, we send the statements every year, an annual statement to a member. And we also have an online system where you can click on and check your statements. But I always advise people not to check it every month, because the market goes up like pension is a long-term thing. So please don't check every month, but we have that app where you can check your statements. Apart from that, I wanted to say that the preservation is really necessary. I've come across my colleagues who leave within 2 years, they don't have money because they use the money for other things. So we really need preservation. The question is, how are we going to do preservation? What are the percentages? Maybe to Dr. Nakuta, maybe the 75% that the minister was proposing, maybe we should reduce the 75% to another percentage, but preservation should be there.
What do you think, Christopher? The right range.
Also, people I spoke to said we should just change it like that. When you take the 35%, the fund can keep the 25%. Yeah, but maybe the percentage should be relooked, but the whole idea of preservation is really a noble idea. Thank you.
Yeah, so on the issue of sustainability, I think we can't ignore coverage, who is included, and we have to address that. And I think a pension system can't be divorced from a country's economy and from the social dynamics that happen in a country. So it's definitely not something we can ignore, and we have to keep with the times. And I think it's a wider issue when it comes to those at the bottom of the pyramid, generically in financial services, right? So whether it's retirement, savings products or insurance or just to be banked, it's a wider issue that we have to look at from a policy-making perspective that can't be ignored. And so that as that discussion continues, the financial literacy is also paramount to the sustainability issue. And I'm happy to say that the Financial Literacy Initiative, FLI, GIPF and RIFIN are coming to market with various initiatives, starting with a booklet. But I take to heart what the engineers said, and we must incorporate digitization and maybe look at developing an app just for the youth as well. So thank you. Went well. Thank you.
From my side, I would simply emphasize that the pension system we have in place, the pension framework we have in place is really voluntary for those who want and those who can. I believe that for social protection, we actually need a system that's aimed at providing social security or providing security for the vulnerable or for those who are vulnerable in their life cycles. So the current system is not geared towards that. It is for me who is able to put aside for what can sustain me in my old age. And I think there is a need for us to look at actually making sure that our people are secure in the years when they can no longer work.
Consumer plans for consumer education. Amfisa?
We have a whole consumer education division that's out there with booklets, road shows, workplace engagement, school program, and so it is in the works. What is becoming apparent is that ideally we should be getting to people before they start employment or before they start earning an income. That is what becoming apparent, and